Hi, Warriors. Another big week ahead. How's everyone doing? Haven't seen you for a while. You haven't seen me for a while. How's it going? How you doing, AJ and Mike and Ingmar and Steve and who else is here? Ryan's here today. That's great. Kman, we're at full strength. Kyle Barnum, welcome to Face, new handle. RJP, how are you? Monir, James, Paul. Everyone's doing okay. All right. Hope everyone had a good weekend. There's a lot of good NBA stuff on. So we have again a comatose FX market today. So I did notice that Blake has this on Twitter as a little triangle here where you could break out of it either way. Um, my view is the first breakout will be the fake out, but I'd like to see it try the upside first. Maybe for symmetry, it could even get up to here. It's at 147.40. No, that can't be. Yeah, 114.73. So, yeah, about 100 higher. And Dixie, quiet. I mean, quiet, quiet. Even the yen, quiet. And I think the big news this week is the NFP.
Calm
So,
before the storm, Dale.
is it? And what's going to light it up? When does the lightning start?
It's already started in Spain. Apparently, they got a blackout over there. Um,
Okay.
half the country down, but yeah,
Do you think
yeah.
that
What?
was what do you think that was an outside actor that took their grid down or what?
I
Calm
don't know.
before the storm.
It's happened. It happened before. Big storms and stuff.
Oh,
But
okay.
you never know, do you?
No, you don't anymore. So where are you at on this euro, Ryan? I mean, this is a pretty tight range for about 5 days.
Yeah.
50 pip range.
Yeah, you can call it 113, 114, pretty
Yeah.
much.
Yeah.
And right now we're 150 pips away from my 115 and 150 pips away from my 112.
112.
So
Yeah.
three guesses
No
what I want to
man's
do
land.
here.
Okay, no man's land.
Yeah.
All right. I was looking at Canada. I know Blake was trading it from the long side, and you had some movement, counter trend. But I would actually like to see one more low in Canada for a three, and I'll try it, once they take out the stops here. Or, could probably just go from here if it holds these levels. Looks like the opposite of Euro. But
Yeah.
I thought maybe we could get one more low there. We'll see. Um,
We've
you
got
know,
the
not
election today.
what election do we have? We have Canada, right?
Yeah,
Uh,
yeah, Canada today. So maybe this
today.
one's taking a
Okay.
pause.
It's pretty much a lock for the central banker, right?
Seems that way. So we
Yeah.
know where the shock will be, but I don't know how much of a shock it'll be if he doesn't get it. But
Okay.
we could expect some.
All right.
And
All
by
right.
the way, and good morning, guys. We just
Good
I,
morning.
I was just doing a little bit of reading, and we should get some exit polls around 10 a.m. So probably in the next 2 3 hours, we should start getting some idea of how things are looking for Carney or Poilievre. Just FYI, we're doing some searching around in the chat room today,
Okay.
just kind of trying to figure it out. So I think that's about it. But maybe we
You're
have some
like a
Canadian viewers here that might want to chime
yeah.
in.
Yeah. Also, with this election coming up, I guess it's a wild card. Trade your charts. We also have BOJ this week, so I'll go to K-Man. How are you, Kay?
Morning, everybody.
No snubs. So, what are you thinking going into BOJ?
Well, my first idea was no change this time. Well, actually, my opinion evolved over time. I thought for quite a while there was a fair chance that they would do. Now, what's been discussed really behind closed doors between Cato and Besant, we'll likely won't know before maybe sorry, days or weeks. Um, I think there's still a bit of a chance that they do, but have to side with the majority now, saying that they're going to wait to see what comes out of all the negotiations between the Japanese and US officials before moving. So, yeah, my opinion has evolved a little bit where I thought that they would in the new fiscal year hike rates, but
Yeah.
perhaps they will wait. Yeah.
I think it's possible that the U.S. government has too much on its plate right now because on top of what's happening to get trade deals, now they have a major battle to get their tax package and budget cuts through. I think it's going to be intense there. I'm glad I'm not in politics. So as far as trading this, anything you would do, say for example, they do nothing, what would you expect? A pullback
I
here
I would guess
or
if they don't do anything, we have
46?
a bit of a blip up, but then it comes right ahead of the NFPs, right? So I think this, if we get like a two big figure or so rally, it may get countered because the market is now expecting at least that these Doge layoffs will start to show up in the at least them and potentially other problems start to show up in the NFP. So my view is that we're going to have a week in two parts here. First part of the week, trading end of month, all kinds of rumors flying around about big dollar buying and stuff, but still has to be seen because the equity markets are still on the move. But we could have, yeah, a two-part week here. Dollar perhaps doing a little bit better to start the week, and then second part of the week, we may see front runners try to perhaps sell dollars into the NFP,
Hmm.
and that's kind of how I look at it right now.
Yeah, I would say that there aren't any fat pitches out there right now that I could see.
No,
So, I mean, I find myself saying, well, I'll do this if this happens, but there's nothing
Mhm.
compelling for me right now.
No,
In
I'm
fact,
yeah,
you feel that way?
I'm running smaller positions as well, Dale. But there, I do think this week it moves. But we will talk about the jobs reports
Yeah.
later, because
Okay.
I think if the market gets what it's looking for, finally a weaker report,
Yeah.
expected or not, that should weigh on the dollar.
Okay. All right. So, just wanted to talk a little bit about risk. We've had a great rally from that 4,800 level, this line, which, doesn't surprise me, but I didn't have the courage to buy it here or here. I bought oil instead, which, rallied, but certainly doesn't have the same beta. I will say it still is staying above 62, but, it's kind of my Rip Van Winkle trade. Who knows Rip Van Winkle? Anyone? Do you know what he did? Guy took a nap and woke up 20 years later. All right, so that's crude, but I was thinking about this now that we're approaching some fib levels, and if we have equality, 5,800 would be a level. But all the way on this rally, one of the reasons I didn't get real bullish down here was, we confirmed the lows. Okay, look at that. I mean, look at what momentum was. It's like a 5 or 8 reading, and you have that in individual stocks too. A couple I'm thinking about is Apple again, rallied back, and all of these look like they're rallying back to resistance now, right here to where they broke down. Most of them 50% to 61.8 back. Same with Meta, that doesn't even have that in it yet. Google, that's to me, it looks like a corrective rally. And they see the difference between Google is it did diverge. So this would not be a candidate for me. I want things that confirm lows, and most of the indices did. NVIDIA, if we get back up to like one in the 120s, I'm going to try it. So, it's not because I don't believe there can't be a melt up. It's just that the trading opportunity that's facing me now is we've had this big rally. Is that all it is a correction to that first big break? So I have to try it to see if it was. Okay. And so that's what I'm looking to do more towards the end of the week, because I need the market to follow through to the upside a little more to get some of the price levels I'm looking for on individual stocks. So where's your head at on S&Ps nowadays, Blake?
I'm actually, well, we're pushed up to 5,500. Like I said in my week ahead video, I'm actually looking to sell at 5,650. I'm hoping we get a push up there. I think that the market's kind of climbing the wall of worry right now, and we're just trying to move up there. I think it's going to give us a good opportunity to be on the short side, Dale. So
yeah, okay.
That's what I hope anyway.
Yeah, I think we'll get that. We'll get those levels this week. So,
yeah, I mean, we're expecting headlines from the U.S. as far as working with a lot of the trading partners, whether it's Japan, maybe some other smaller countries. I don't think they're going to be able to, it's going to take a while with
see
the
that
EU and
RSI
everything
there
else.
down there. Look at
Oh
that.
yeah,
What was that reading? What was the reading at the
it
low?
was 19 or so,
Pretty
19 or
intense
20.
reading.
Yeah, very, very oversold. What's interesting is even though we didn't get, we didn't get a follow through down here, it still was very, very oversold. But as you know, Dale, this is like the 4,800 level. That's the level that in the event we break that, I think the gloves come off at that point. You know what I mean?
Yeah.
So
So it looks like I'm looking at it as the first wave up was A, and the pullback where you bought it at 5,100 was B, and if A equals C, well, we should go to 5,800. There's still quite a few points left.
I don't
if it does
disagree with
that,
you. I don't. This is the 200 DMA, so I mean,
I
could
would
we
try
reach
it
for it
there.
again? Why not?
Yeah.
Yeah. I still want. I'd like to be on the short side ahead of that. I don't think it's out of the picture or not, or impossible. Let's just put it that way. So I think it is still very possible. But there's a lot of things. I think there's a lot of things that could really develop this week, and I want to just kind of comb through some of these assets and then get everybody's take here. It looks like Steve's here. Love to hear from Steve this morning. But the euro is Dale, you pointed out earlier. Yeah, I did post this chart. I think the euro is really setting up for a move here. Bessent's on CNBC right now as we're speaking, and there's a lot of headlines that are flying. He thinks that the ECB is going to be cutting, to get the euro down because the euro's so strong, and he thinks that Europe's really scared of this stronger Europe, stronger euro, which, I think we might be in a situation in the coming, years ahead where we're all in a race to try to weaken our currency. Yeah.
Race to the base.
Yeah, debase a little bit of a currency war going on. But for right now, I mean, the euro, I have to admit, still looks very constructive to the upside. I don't.
Yeah.
I'm not bullet, or I'm not. Let me take that back. I'm not long, but I still think this is a very bullish consolidation, and I still am looking for a short a little bit higher than where we're at, and I still think that it's entirely possible. But I think this week we're going to get some resolution here. as far as which direction the euro is going. Sterling also a little scary. This is your throw over, Dale. So a little bit
Yeah.
of throw over there in,
Yeah.
in sterling, and we matched these highs, and we backed away, but it's still not it's still not selling off. So
No.
I'm not overly confident in starting to short it. I don't know if I really want to be long. These purple
I
lines really, uh, I think, tell us what we should do, because if we break
I
out, we
think
break out, right?
yeah, last week I think before you went to do the interview with Tracy, you were talking about I think notes having a bearish cast to them.
Oh yeah, yeah. The 10-year here, and
Yeah.
right here, and they didn't it didn't follow through.
Oh, okay.
Not yet, anyway.
Yeah.
This is what we were talking about. Remember yesterday, or yeah, last week we had this
Yeah.
like gravestone doji, long upper shadow doji, and you
Oh,
would
I
think,
see it now.
yeah,
Yeah.
you'd think it would have played out to the downside, and it didn't.
Yeah.
And then we're just at the upper end of the range right here. We're toying with it, but now we're starting to fail. I don't know. I'm not sure how to look at the 10-year. We were just in the chat
It's the
room.
toughest call out there, I think, right now.
I agree
The
with.
messiest chart out there.
Yeah, we were just talking about it in the chat room. I was just mentioning, I think yields look a little easier. You can see why yields, the 10-year note yield,
It's holding here.
is holding. So, you'd think, okay, well, maybe we're going to get a rally in yields, and the dollar is going to reciprocate, and I don't know. It is a tough call. I agree with you. A couple other things that I think are important today, that are currently in development are, the Aussie. I think the Aussie is very tough to trade right now.
Yeah.
I think it's this. You can see we have a 2-week range here. So let's let's extract what we know. We had a false breakdown. We've had a rally, and now we're consolidating. That consolidation is a very tight consolidation and a very impulsive move higher. So the risk, I still think, lies to the upside. That means,
Yeah.
weaker dollar.
Agree.
I think
Yeah.
that's where the risk lies. I'm not confident enough in that to just start buying the Aussie dollar, because if we break down, it's just going to be a mess. I mean, and that would have to do with, probably some pretty bad news with the China-US relations, and we come to a conclusion that there's nothing for us to really look forward to. I keep hearing this, and I'd like to get some feedback from Ryan and Kman, and you too, Dale, and maybe Steve. We keep hearing that the U.S. is trying to cobble together. They have this like framework that they're going to do. Um, they've got this huge framework that they're following, and all these different countries are going to be, there's like maybe 15, 17 different countries that have approached the US, and they're going to follow a certain framework to get a deal done. But I've heard a lot of analysts talk about this, and we can look back at the last time that we've had that Trump was his first term. Trade deals are not done in a few
90
weeks.
days. Yeah. Takes
Yeah,
years
I mean,
sometimes.
it takes years, and you hear a lot of analysts say that and reference it because it's complex. It's not like, okay, 10% tariff for you, 5% for you, 25% for you. We're all moving along. It's not that
You
simplistic. So
you can
this is
complete
going to
trade
be,
deals a lot faster than that if your intention is to change their name and change 1% of the content.
I'm sorry, Steve. Do you want to explain?
What have we seen so far from the previous trade deals that Trump has made with Mexico, Canada, etc.? That it's practically nothing different. He just wants to, put a different stamp on the same type of deal and call it a day.
Sure, but USMCA still took what, a year and a half to even though there wasn't a lot different from the previous
Yeah, but now
trade
they're a lot
deal.
now they're a lot more experienced. At the beginning, they began the whole process in the last tenure by actually attempting to change something in the trade deal. Currently, I don't even think they're trying.
Okay, so then what's your conclusion here?
My conclusion is that nothing is going to change again. They just want to rename a couple of deals a little bit differently and call it a day.
So
So all the fear over tariffs in the markets and whatever it is, it shook the trees.
I think the bluff has already failed. To be very clear, right?
What has failed?
The bluff.
Oh, okay.
The bluff.
Yeah.
Yeah.
All right. So he was playing chicken, and China didn't back down, basically, and they're not going
The rest
to.
didn't back down either, right?
Yeah. Yeah. They're just let him twist in the wind. So why would they give him a trade deal now?
Why not? Why not? The rest
Yeah.
are not stupid. They also want the best for them, right?
Yeah.
The best for them is definitely something. I mean, nobody wants
Sometimes the
tariffs.
best for others, it means the worst for America, because that's part of their, there is a lot of resentment, and not that it isn't warranted. Okay.
If
But
there is one party taking advantage of the others, it's America taking advantage of the rest because America is getting
because it has a reserve currency.
stuff actually made, right?
Yeah, cheap.
In exchange of IOUs, just because the US has the world reserve currency.
Okay, so it's not going to be that way. So they're trying to end that game. How could there be like non-event outcome to all of this? Because you're talking like sanguine, that this is a sanguine situation that people shouldn't even really pay attention
I think
to.
that Trump has correctly identified issues. The remedy, though, is not one that can work. It's not the
Right.
correct approach having to do with how to remedy the problems.
Right.
So you're saying it's just going to exacerbate the problem, but nothing's going to happen. So the question that we have for you, that I think Dale's trying to get to as well, is, well, what the hell are we going to do trading wise? How's it going to move the markets, Steve?
I don't think they're going to be doing the same mistake again. I don't think they're going to be trying the same type of bluffs again. Because they saw that it failed, and not only it failed, it almost produced a panic in the market. And that's the last thing the US wants, right? To also reverse the wealth effect, in essence, to create a financial market panic and a loss of faith in the US, in US treasuries, etc. So instead of getting a positive result, they almost got the most negative type of result you can get.
So is it okay to buy bonds now that they're not going to do that anymore?
The thing is that bonds, I mean, the way bonds are going to move is not only based on that. Definitely that factor is probably fixed. I don't think they're going to be trying the same thing again. But don't forget, we have other factors as well. We have inflation, right? Plus some of the loss of faith that happened during the past negotiation is not going to immediately disappear. It's not that everybody's going to conveniently completely forget about it. I think at the back of the mind of everybody is that, there is increased risk at the moment.
Yeah, that things could change, flip-flopping around.
Yeah.
So that the U.S. is not a reliable partner.
Definitely, it's more volatile and less predictable than it was, right?
Yeah. Okay.
That's not necessarily only a bad thing. Let me be very clear about it.
Okay.
But in this case, it is. And I think that, Trump and the government have realized that. So I think that from this point forward, negotiations are going to be more, to keep face, to save face, right? So they're going to probably be negotiating again, but in very mild terms, and probably will end up striking a few trade deals that will practically change nothing. But of course, they're going to rename them and they're going to present them like big trade war victories. Don't have any doubt about that.
Well, of course, yeah, that of course. Well, it's
Okay.
going to be interesting to watch it
Yeah.
develop. It's gonna be interesting to watch it develop and how it affects the markets. I do believe, Dale. I think you're right as far as the crisis and confidence, if you will. It is really shaken the confidence of the markets, of people that hold dollars. I think we're going to continue to see diversification away from dollars.
Yeah.
The dollar, in other words, the dollar is going to remain under pressure, which, probably puts the euro close to 120 before people realize, oh shit, I'm buying the euro up here at 120. What am I doing? And I think until then, we just got to continue to play that situation. I want to get some thanks, Steve, for your comments. I want to get some wrap up here from Ryan and from Kman regarding what they're looking at for the week. But before I do that, I do want to mention Melody Wright is here with Dale, which, you talk about the wealth effect being destroyed. You guys probably saw me just Googling about real estate prices. I do live in one of the more sensitive real estate markets here in the United States. I live in Scottsdale, Arizona, where it's a very hot real estate market, or has been, and has been for years. But it's extremely sensitive to price swings and the wealth effect. And you have, I want to say, like, half of the people that I know in town, which is, quite a few people, they are in the real estate market in one way, shape, or form, whether it's through the mortgage industry, commercial real estate, they buy and sell commercial real estate, homes, realtors, that type of thing. But also people are very much tied to their real estate investments here. And I think the wealth effect is one thing that we need to be very sensitive about, especially when you're looking at the US economy, because consumer spending, is, especially if you're talking about the top 10% of the US, their spending habits are driven by how wealthy they're feeling. It is the wealth effect. That is something that has been put into play really since the Greenspan days. And so when you have, people that own multiple homes, and a lot of their homes are where I live, they're empty ones, they're vacation homes, they're, $4 million homes on the mountain that get used a month out of the year. When those lose value, people spend less, the top 10%. So it's going to be really interesting to have Melody here to hear what her thoughts are on the real estate market. But before I get into that, or before Dale gets into that, excuse me, let's hear from Ryan. Ryan, what are you looking at
You
this
better
week?
start packing, buddy.
Yeah, I mean, hey dude, I'm moving to Portugal coming
Yeah.
up. Coming up in the
Yeah.
next couple of years. Ryan, what are you thinking right now for the remainder
Too
of the
late.
week? It's a jobs week, employment week. I know you're going to be looking at the JOLTS jobs report. What else are you going to be looking at this week, and what are you going to be trading?
We're looking at Eurozone inflation, all the new GDP numbers to see if there's been any effect in growth. We're getting all the flash Q1 numbers coming through.
Yeah.
As I said, inflation. We've got UK elections. We've got Canadian elections. We've got Aussie elections. There's so much we've got being thrown at us this week. So I'm going to take each day as it comes, I think. But I'm keeping an eye on that Aussie dollar and whether we can break that 64.40 level.
So you're looking for this range to break, and I'm with you. I think this range is, I think it's threatening. I'm playing in either direction. I'm not going to get too married to that, but I still love what your US dollar Mexican peso on the short side. I've been trying to get short this thing literally after being short on the breakdown. I've been trying to get short on a rally, and I have a feeling we're going to be chasing it lower. Don't you?
Yeah, well, I had a little chase last week at 63. I wanted to rally up to that 85.90 area. We never got it, so I ended up chasing it lower at 63, and it faffed around a bit. I think we need to get and hold below this 50.52 area do
You
that,
know,
and we'd probably leg lower down to the 38.2 at 1936, 37-ish.
I know I blogged about it on the chart of the day, which Steve usually does the chart of the day, but I've been filling in for him for the last couple of weeks. This is a nice rounded top, and you know, it looks like the dollar mex is heading down to 18 over time. So I think that's what it just looks ugly at this point. Kman, what are you looking at this week? I know as you and Dale were talking about with the BOJ this week, you looking to trade yen. What are you looking at?
Yeah, as I said, I think we have a week in two parts, but the market is already making me doubt. So not because the Aussie is really strong. I think there's a bit of euro crosses also selling as well during the European morning. So keep an eye on the clock. Yeah, I think a week in two parts, and I guess that starting May, the second part of the week, we should see a bit of a weaker dollar again because the market is going to think that the weaker jobs market is finally starting.
All right. Well, so K-Man's going to be looking at the clock, end of the month, end of the quarter, a lot of or not end of the quarter, excuse me, end of the month. Supposed to be quote unquote dollar buying coming in, and
I look to counter trade it.
What's that?
I look to counter trade that.
Yeah. So in other words, if there's some dollar buying coming in, then K-Man's looking to fade that move. So we'll be here every day this week. So make sure you guys are around getting updates from the rest of us. Also take advantage of the liberation offer. Remember the liberation offer. It's 40% off our monthly our monthly subscription price. We backed up our prices 5 years to help out with the lack of the lack of product that's going to be on the shelves as we get through the end of the year, and as we get through this year and prices going up everywhere. Well, you can save some money here. So, we backed up our prices 5 years. So take advantage of it. And I'm excited to hear from Dale from Melody and have your interview here. I think it's going to be an interesting interview. Again, one of the drivers in the global economy is the U.S. consumer, and one of the drivers of the U.S. consumer is U.S. real estate prices. And I'll be the first one to tell you that I've seen prices are starting to really look vulnerable in the housing market. Which would be good for our younger demographics. I know my nephews that are 26, 28 years old, they really have lost the American dream, and it's going to be interesting to see if that ship has sailed or not. So Dale, have a great interview with Melody. We'll be here listening, and thanks Ryan, Kman, and Steve for being here.
Thanks everyone.
See you, Dream Team. Thank you, guys. How are you, Melody?
I'm good. How are you, Dale?
Good. I mean, a lot has happened since you and I last talked. Tariffs, markets, bond market under pressure. What's top of mind for you as we sit here today?
I got to be honest, it's kind of what Blake was referring to. We are starting to see weakness in prices. Yeah. And, I really believe we had something happen last month where new home prices came in slightly lower than existing home prices. And that has only happened before last year, one other time. That was June of 2006, Dale. Okay. Last year, it happened several times, but then the following month, you would see that relationship reverse again. And so what we're going to see, I think, is a capitulation in the NAR existing home series for prices year over year, probably as soon as May. And so there's absolutely weakness out there for so many reasons that you and I have talked about before. But it's as if all these themes that I've been talking about for several years, they're all coming to a head at once. And
How does that feel? How does that feel for you to be right and to have been a voice in the wilderness that no one would listen to for about a year or so?
I still don't believe it, Dale. I think that I'm still surprised by how quickly this is actually happening this year. And so I'm
It's
not going to
interesting.
take a victory lap until Blake's nephews, my nephews, they can buy a home. That's when I will
Okay.
take a victory lap. But
All
we are
right.
a lone voice for sure. It just made me stronger, and we're really starting. The inventory story is the story. I mean, it's flying to the markets all over the country. It's not just in the South
Yeah.
or the
Yeah.
West. So, and then the next thing is, and this was the biggest news that we've gotten, Dale, but with everything that's been going on, the administration came out and ended the very aggressive and loose FHA loss mitigation program, which is a huge deal. What people were doing is they go 3 months delinquent, 6 months delinquent. They would go get a workout. They go six
Yeah.
months delinquent again. They go get a workout. There was no limit to that, except you could only do that up to 30% of your unpaid principal balance. But people were just using this like an ATM. Even
Right.
if they were able to pay, they weren't paying. And so stopping this early is going to have a massive impact. That was the biggest thing that I was worried about coming into the year. What is the administration going to do to shore up housing? Are they going to do anything? And honestly, every step they've taken so far is signaling that they are going to let home prices decline.
Okay.
And that
All
wealth
right.
effect reverse, which
Yeah.
is huge, as Blake was talking about.
Well, you know what? That was their policy. That all the people that were left behind that couldn't buy houses, and they were going to make it affordable again. And you need a crash. Someone has to be left holding the bag. Who are going to be the big bag holders? Individuals, banks, hedge funds, junk bond owners. Who takes the hit here?
All of the above, Dale. So, but really, our top 10%, as Blake is kind of saying too, are going
Yeah.
to get hit really hard because
Yeah.
they're the ones that own the homes. Property taxes, insurance, replacement
Yeah.
costs. These things are just exploding, and not just in LA and not just in Florida. It's all over the country. And so the landlord class is going to get hit the worst. Very similar to the Great Depression. Everybody became a landlord. And then they
Okay.
realize that's a miserable experience. But yeah, I think at this point right now, it's going to be the wealthiest among us that are going to be hit the hardest.
Okay. Well, that's really a change. That's a paradigm change because they've weathered everything.
They have.
The dot-com bubble, the COVID, the real estate crisis, um, everything. And the markets always come back for them. So, you bring up the speed of the decline in real estate. I was looking for this break in the market, but I thought it was going to take till July. I never dreamed it was going to, targets would be met by April.
Right.
So that's happening in both fronts. That means that things are in an acceleration stage
Mm-hmm.
and out getting close to out of control stage.
Right. Right.
Okay.
And I would agree with that. And to put something else out there, Dale. So those buy downs that the builders have been using, so
Yeah.
even the prices we see for new homes are not in any way reflective of actual price because there's so many concessions.
Yeah.
But they started offering those in July of 2022. And those were what we call 3-2-1 buy downs, the majority of them. And they
Yeah.
weren't the only ones. Fannie and Freddie did it, Rocket did it. Those start resetting in July of 2025. Very similar to the arms of the last cycle.
Okay.
People are not going to be able to refi. And so they
Yeah.
are going to have to accept that higher rate. And there's not good reporting out there, but I believe this is much more material than people understand because no one is reporting. The systems just aren't capable of reporting this information. So I think that there's going to be a big shock in the middle of the summer as well. Just as these 5 million student loans borrowers are going to be forcibly collected
That's
on.
right.
I
Yeah.
mean, there's just so much happening. The door to credit is being slammed shut all over. And that mortgage refinance rejection rate, the Fed just told us about in February of 41.8%, the highest in that series, which started in 2013. That's massive. People are not going to be able to get credit and they're going to have to make decisions. I tweeted something last night from an account on X Twitter where the Googling sell my home fast just skyrocketed, hockey stick
Okay.
for Google Trends because people didn't think they were going to have to pay those student loans back. And that's going to change things quite a bit.
Yeah, so we're really only at what would you call this? The first, second inning of the ball game?
I would say this is it's the first inning. We've been in the first inning before, Dale, in late 22, early 23, and then the BTFP and all of that.
Yeah.
And so that's one reason I'm a little nervous too, because they rug
Okay.
pulled us back then, because we were
Okay.
starting to see this same weakness in the housing market, not just in
Okay.
sales, but prices. And so, but I very much feel like we're in the first inning again, but it's accelerating. We're at the end of the first inning, and it's about to
Okay.
get a little crazy out there.
Okay, so it's hard to call the bond market right now. It's it's the messiest chart I have right now, Melody, and
Mhm.
my bias is they haven't done anything. It wasn't impressive for a 20% sell-off in the SPOOs and Nasdaq 30. That wasn't much of a flight to quality rally.
Oh no, no.
So and if the TLT takes out 85. I have targets down at 70, which people would think I need to be stabilized to have a target like that. But do you think that we're still in a bear market in bonds? So there's not going to be interest rate relief for people to refi, or do you think that the Fed is going to step in? They did say a week ago when the bonds put in that squirrely day, market down, bonds down, that they would provide liquidity. Do you think they're starting to ease already without moving rates? They stopped QT or almost stopped QT, and do you think they're in there pumping away right now?
They could be,
Yeah,
but honestly, Dale, I just think for right now, I think we're kind of stuck. I mean, that's the feeling that I get, and I also I don't think there's been a lot of talk about foreign selling and things like that, which we
yeah.
haven't seen really bear out.
No,
So
they've been big buyers. They come with suitcases of money when I sold my house in 2012. So,
yeah,
do you think there's capital flight of foreign investors from U.S.
I think
property
that
too?
well, definitely in property, but in the bond market, I think, I think that's the threat. That's what everyone's a little worried about. However, I don't see that happening, but I don't think we're going to get rates where Dale, for them to really matter in the refinance market. Uh, the Fed would have to buy mortgage-backed securities. I mean,
Yeah,
there's nothing else, and even then, we're seeing the spread widen out. We're seeing pricing
yeah,
deteriorate in MBS. This what just happened with that FHA program. When the bond market actually wakes up to what that means,
yeah.
mortgage-backed securities are going to start to suffer. So I just think we're kind of stuck at the moment. I don't see us going in one direction or the other, and for the foreseeable future. And I honestly believe this tariff stuff is just a lot of noise,
Okay.
and a lot of noise, and to keep people busy and focused. And if we just
Distracted.
distracted, because honestly, we haven't really moved that much, right? And so
Yeah,
in the bond market.
yeah,
And I
right.
watch that because the Fed doesn't control mortgage rates. They may act like they do, but they don't. So I think that, whatever they do doesn't really matter to me. I'm watching what the bond market itself does. And right now it's just saying we're staying right here.
Well, regarding MBS, when they made that announcement on QT, they were going to stop selling bonds, but not MBSs.
I know.
Okay, so I mean, do you think they knew something? They
I
wanted to
so
get those off the books as quickly as possible.
So Dale, I take a little bit different view. I think probably Powell and the administration are working together, and they can point at each other, right, and say it's your
Uh,
fault. No, it's your fault, and then
uh,
neither one of them are really to blame. But
yeah,
yes, they know. They know,
yeah,
Dale. I mean, they
yeah,
know, and so it's. I mean, this housing market it's and the MBS market is in such rough shape, and people just don't even. They have no clue. And so it's
yeah,
gonna, yeah, things could get really interesting, Dale, when people wake up to what just happened in terms of appetite for FHA and for Ginnie Mae MBS.
yeah. Okay, and you say it's nationally. Um, is Blake is in Scottsdale. Are prices coming down there?
Not yet, but
Not yet. All right.
inventory, yeah, inventory it's really since 23, it's exploded there. I was
Yeah.
just looking that up while he was talking.
Because they keep building all these plants there, Intel and
Oh my
everything.
gosh. I was
Yeah.
there in 2023, in January 23, and I couldn't believe my eyes. And you know, in fact, actually, I could tell Blake about some subdivisions he could go to right now out there that the weeds are growing over the sign, and you know, they will. And everyone's gonna say Long Island still strong. This little market in New Jersey still strong, guys. There's a little program called Property Radar. I encourage anybody who's really in the market to sign up for it. They don't sponsor me. I'll probably ask them to. But you can go look and see under these markets that you think are so fine, how many property liens, how many owner liens, how many tax liens, how many underwater loans. So you think it's fine because that's what everybody's telling you, but it's not. And so you can, you know, honestly, we just got to give it a few more months. And I tweeted this last week. The Northeast inventory is now leading. They are leading the inventory growth. It's been the South and the West. And so the Northeast is about to join the party. Just give it a couple more months.
How about all those employees that got cut by Doge? They were homeowners.
Absolutely.
So that Virginia corridor, that Washington corridor must be melting.
And they were already selling. I mean, that started like in the fall in DC and around those areas. But Dale, it's just everywhere. To Blake's other point about the vacancy, that's what so many people don't understand. Our housing market has not been about providing shelter for a very long time. That started changing with Greenspan. And so essentially everybody has a second home, third home, fourth home. Even 30-year-old millennials bought one because they thought they were going to do short-term rental, long-term rental. And so now what's going to happen is all of those vacant homes are going to start flooding the market, as well as the boomers who, you know, need to unload
They're stretched
properties.
out. Yeah.
And so, and they can't afford these increases anymore. So, it's everything we've been talking about for the last couple of years. It's all happening at once.
Okay. And how about in my neck of the woods, Southern California?
Southern California blackpilled me, Dale. Like I was out in LA and San Diego.
They saw you wouldn't let you get off the plane.
I could not believe how bad off that market is. And because everybody talks about how impervious it is, but you know, no, 119,000 households have left Los Angeles since 2020, and you can see it. And so right now everybody's living on what was 5 years ago and not what is. And so I think reality is about to hit Southern California in a big way. And you can see it in the malls closing and the shops closing. And I mean, it's just
restaurants.
Yeah, it's changed. And nobody's
and tourism because a lot of people are angry at us.
Oh, yeah.
They're not coming. And a lot of states, you know, Florida, California, depend on tourism dollars. I know that the governor is putting out ads to show how fun California is and please come spend your money here. But he's worried.
They're in so much trouble. They're in so much trouble. I mean, wasn't the budget? I mean, they're in so much trouble.
My buddy in Illinois and his son who knows everything. You ever have friends whose sons know everything? Anyway, he said, well, Dale, I know you were, you know, I sent them your video from our first interview because they own all kinds of stuff. And he goes, well, you know, Illinois is strong. It's Illinois strong. Well, Chicago's strong. Is he eating mushrooms?
With his, he is. I mean, but it just, you know, I hope to get out there pretty soon because it is a weird market. But yes, mushrooms, because they're I'm sorry, Dale, nobody can afford these homes. They can't. It is absolutely unaffordable, and they can't make money off of them either. So they're really bad investments. So, you know. It's changing. Okay. It's just about awareness. It takes time. And there are a lot of people that are still very attached to their estimates and their lofty valuations of what but you know, it's the bezel, right? You think you can think that silver's in the vault, but it's not really there. So that's really what these estimates are. Fannie Mae came out and said that, you know, they looked at 7 million comparables. 55% of them didn't capture seller concessions correctly, inflating values. So these things were
Yeah.
already inflated. And so the price of your home is what you can sell it for or what you can get leverage on it for. And
Right.
those estimates have nothing to do with reality.
Yeah. Why do people keep buying that stock, Zillow? Do you know?
I think because it's sexy. I mean,
Eh,
it just, it's um but really they've done nothing. They do maps. They do a nice
Yeah.
map. That's really it. I have no idea. It's the same I ask myself about, and I know Airbnb is degraded, right?
Yeah.
But why do people buy that stock? Like, I mean, it makes
Yeah.
no sense to me. And then Dale,
Are
the
they
non-banks.
imploding more? Are they
Oh, I
imploding
mean,
more?
so
Yeah.
last earnings, it was all about international travel for them because
Okay.
their whole business model is just adding listings, and they were doing that internationally. It'll be very interesting to see what happens this quarter because to your point about the tourism falling off, we're
Yeah.
not getting international visitors here. So very
No.
much looking forward to their earnings this week. But the stocks to be watching in the next year, Dale, in my opinion, are going to be these non-banks like Cooper, Rocket, UW, because they are in for a world of pain and they have no idea what's coming their way.
And I think you told me last time that lower rates would actually hurt these companies rather
Oh, it
than
did.
higher
Look at
rates.
every single one of the results, Rhythm, all of them, because that's what happens to the MSR asset. You have to write it down when you could get lower rates. So
I see.
anytime that's your key. If you watch those, if we get that flight to safety trade,
Yeah.
watch. They'll be crucified, Dale. Crucified.
Okay. Some great ideas and Melody's providing. So, Melody, actually, when we first talked last year, I think it was in the fall, I also, a friend of mine in Florida saw saw our interview, and he sold his house, took
Okay.
a minor hit, and told all his relatives about it. So some people are glad to be hearing you talk about this and being, out.
That makes
And
me happy, Dale.
yeah,
That makes
yeah.
me so
So I
happy.
mean, people did heed your warning and listened to your logic behind it and made, that's a big decision for people to make.
Absolutely.
But you've helped a lot of people. Congratulations.
I hope so.
Keep
Thank you,
on.
Dale.
Yeah. So anyway, I really appreciate talking to you. And it's weird, things are going to get rough and real estate and stocks. But you know what? Uh, the 10% they've had a pretty good ride,
They sure have. It's
haven't they?
time for the rest of us. That's
Yeah,
right.
they've had a pretty good ride. So anyway, Melody, great seeing you. Keep
You
up the
too.
great work, and gosh, we'll see what's happening in the summer.
I
Should
know.
be pandemonium by then, right?
Right.
All right.
If we keep going this way. Yep. Thanks,
So
Dale.
follow Melody on X. Your handle again, Melody,
M3_Melody on X Twitter.
and you have a Patreon or Substack.
Substack, M3 Melody Substack, and M3 Melody YouTube. Yep.
Yeah, so before you're out there thinking about buying the second home or think about it now, they're everything bubble is popped, I think. So
Agreed.
yeah, maybe even gold back to 2000. So anyway, everyone have a great day. Melody, thank you so much.
Thanks again.
All
See you
right,
see you next time.
see there's sanity in a world of crazy prices. And Melody was spot on. So follow her, everyone. You'll find it. I have it here. Hold on. Let's see. April. Okay. M3_Melody. Okay, guys? All right. She's great. So, in every crisis, there's an opportunity. And the crisis is you miss the opportunity, right? Well, we won't. See you, Donna. See you, Scott. Adios, everyone. You could be in the morning edge in about 17 minutes.